Fetch AI has given us an aggressive bounce to the upside after the CPI data release, where the data was positive to the market, and you can see that we have seen a massive green candlestick to the upside, and that is an indication of strength in the market. And on today's update video, I will be discussing the most significant key areas of supports that we need to pay attention to, key areas of resistances that we also need to break above, so make sure that you stick around till the end of the video. And starting the video by first giving you a recap of what has been happening from the highs we made above the 2.2. I believe that we have been seeing no prices in this 5-wave structure, where we first saw a pullback in the formation of this wave 1, saw a bounce in the formation of this wave 2, saw another aggressive pullback in the formation of this wave 3, which fully maximized the fib ratios 1:1 on the fib extensions. And you can see that that target area lies above the 1.221, an area that we fully maximized. And having seen the low in the formation of this wave 3, I was expecting a bit of a bounce in the formation of this wave 4, whose minimum target areas I came up with by connecting the fibs from the high of the second wave to the low of this wave 3. And I got a minimum target area between the fib level 0.5 and the fib level 0.382, an area that lies between the 1.513 and the 1.42, the area that I have marked here on the chart using this yellow target area, which is an area that we fully maximized. And you can see that at some point we saw a bit of a break to the upper side of this key area of resistance, where you can see that we finally got rejected at the fib level 0.618 that lies above the 1.606. And having seen that rejection to the lower side, that was the start of another impulse to the lower side in the formation of this wave 5, whose minimum target areas can be given using the fib extensions once again, connecting it from the high of the wave 1 to the low of this wave 1, then dragging the fibs to the low of that wave 3, and I get a minimum target area for this wave 5 at the fib level 0.618 that lies above the 0.714, which is the area over here. And that means that this pullback is not yet over, and we need to see another pullback to the lower side, fully maximizing that target area above the 0.71 before we can start another bounce back to the upside, which can easily get us back above the 1.5 or maybe the 1.7. But that scenario to the lower side can also get invalidated in case we see a nice recovery to the upside in a 5-wave structure, that is from the lows that we made on the 13th of January. In case we see a nice 5-wave structure over here, then that would be a confirmation that we have a low in place over here, and we have started another impulse to the upper side. But if by any chance we don't see such a scenario, I'm still expecting lower prices. And here on the charts, there's a negative structure that we can sketch here on the chart from the lows we made on the 13th of January, terming this as a wave 1. Then we saw a pullback in the formation of this wave 2, then finally saw a bounce in the formation of this wave 3, and there are high chances that the pullback over here is a negative count 4, and we can verify that using the Fibonacci's, connecting the fibs from the low of the second wave to the high of this wave 3. And you can see that we have seen a pullback into the area between the fib level 0.5 and the fib level 0.382 that lies between the 1.265 and the 1.247, which is now giving us a reaction to the upside in what could be the start of that wave count 5, whose minimum target areas can be given by connecting the fib extension from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of the wave 3, and we can get a minimum target area at the fib level 0.618, and that lies above the 1.376. So there are high chances that we can easily get another leg to the upside, fully maximizing the 1.376, and also give us the high in the formation of this wave 5. And the moment that plays out, then that will be suggesting that we could have a low in place to the lower side over here, and we are now starting to see a change of structure to the upside in what could turn out to be a more bullish case scenario here on the fetch AI chart. But if this structure over here fails, then expect lower prices, having the 0.715 as your next target areas. So that is the roadmap that I'm expecting fetch AI to follow for the next coming days, and let's be patient and see how that plays out, and I will ensure you stay up to date.